Welcome, welcome, welcome. Hi, Charles. Um, I know everybody's just starting to turn on their audio and sorry, we're running a few minutes behind. But I'm from Costa Rica, so like according to my personal clock, we are actually 23 minutes early. Because we are perennially late to everything. So, okay, let's get started. Welcome, everybody. My name is Leslie Feinzeig. I am the founder and managing director of Graham and Walker, and the founder of the Female Founders Alliance. And with me, you can see my team here. Divya, I can't see if you're on camera or not, but my partner Divya is here in Seattle, and our amazing analyst Jenna, who organized today's fireside chat, is here. And Jenna got some like really amazing news this past week, which I will not reveal, but I wanted to have like a public opportunity to say how proud we are of you, Jenna. Can I reveal? No, I'm not going to reveal. Can I reveal? So Jenna got into a master's degree at Harvard, which we're very excited about. I know, yay, Jenna. So I hope that you feel the love from our community right now. Everybody turn on your cameras and like applaud Jenna. Yay!
That is
So
ridiculous.
proud of you.
Thank you, Leslie.
If we had like an in-person event, then I would do a much bigger deal of this and embarrass you like really hard, because that's how I roll. Okay, so now for the main event, I'd like to welcome my friend Charles Hudson, who I like to think is a mentor, but I also know that he's a mentor to a whole number of emerging VCs. So I'm going to intro you and then we're going to jump right into it, if that's okay. Charles Hudson is the managing partner and founder of Precursor Ventures, an early stage venture capital firm focused on investing in the first institutional round for the most promising software and hardware companies. Under his leadership, Precursor has raised 4 funds and over 175 million under management, invested in 250 companies and supported more than 400 founders, which is incredible. Prior to Precursor, Charles was a partner at Uncork Capital, co-founder of Bionic Panda Games, has an MBA from a little unknown school called Stanford, and a BA in economics and Spanish. I didn't know the Spanish part. Should we do this in Spanish, Charles? No. From Stanford University.
Hold on, Charles. I don't think we can hear you.
Oh, we can't hear you. Oh, shoot. We can pretend that you're doing it in Spanish. Okay, I'll keep reading your bio while you figure out your audio. So he serves on a number of boards, but also what I want to say is that Charles is a truly a rising star in the VC community that has helped myself and helped a lot of emerging managers figure out how to raise funds and how to invest them. And if you haven't checked out his writing, it's always like thoughtful and substantive. And as you know, at Graham and Walker, we value substance over hype. And so Charles is somebody that we really like to learn from. So welcome, Charles. Really excited to have you here.
Thank you.
Oh, there we go. Okay, that worked out.
Yeah.
So why don't we just get right into it? I'm gonna kind of walk us through some of our prepared questions, but what I'd really like to do is leave a lot of time open for the audience to chime in. So let's start with like the superhero background story. How did you get to this point in your career? Like what is the part of the bio that's like between the lines that we don't know
about? Pretty crazy. I mean, I'm originally from Michigan. I knew nothing about venture capital growing up. My mom was an attorney and my dad worked in the auto industry. And I would call myself an accidental venture capitalist. I ended up getting into the business because I was interning at a tech company in Redwood City. And I had kind of what I would describe, maybe some of you have had the experience of having an absentee manager when you were an intern. I had one, and I was fortunate that there was a woman on our team who kind of took me under her wing and kind of mentored me and helped me learn a lot about just how to be a good professional. At the end of my internship, she said, "What are you going to do when you graduate from college?" I said, "I think I'm going to go become an investment banker because I like this whole investing thing." She said, "Well, you know, my husband has a venture capital firm. He's got some money from the Central Intelligence Agency. He needs help. Can you help him?" I said, "I don't even know what venture capital is, but that sounds interesting." just following my general principle of like always do the most interesting thing presented to you. I ended up taking that job really like not knowing anything about a term sheet, not knowing anything about how venture capital works, but just curious about learning. So I stayed there for 4 years, and then I went back to business school, and I wanted to be a software entrepreneur. And everybody told me, well, go be a product manager. That's like the closest thing you can get as an approximation. I would not give myself particularly high marks during my very brief stint as a product manager, but I'm really glad I tried it out because it gave me the perspective that this is not the job for me. And so I went and got a handful of operating experiences, started a couple of companies of my own, worked for a big public tech company, Google, worked for kind of a mid-sized private company, and eventually came back to investing because I realized that was my passion and that's what I really enjoyed doing. And sometimes you have to try a bunch of other things to come back to the thing that you're meant to do. So I've been a venture capitalist for quite some time now. And Leslie, my last day at Uncork was April 1st, 2014.
Wow.
So
happy
on Monday,
10 years.
yeah. So on Monday, it's been like 10 years
Whoa.
since I left Uncork, which was not an easy decision. And it's like starting anything. Had I known how hard it would be to get a venture firm off the ground, I'm not sure I would have had the courage to do it. So a little bit of perseverance and a little bit of ignorance can go a long way.
Amen to that ignorance part.
Yeah.
I kind of feel the same way about having babies. It's like natural. It'll, you'll figure it out.
Yep.
And so Precursor's stated like thesis is quite broad. Can you, because I know the number one thing that everybody in the audience wants to hear is like, what do you actually want to invest in? So tell us about what does that actually mean?
Yeah. Maybe I can just tell you kind of like what the motivating thesis is and like why we're so generalist. When I was at Uncork, and I'm sure this will resonate hopefully with some people in the audience, I noticed a really curious fact pattern. Venture capitalists were really, really good at giving money to people that they already knew. Socially, professionally, we worked together, we went to the same business school. We kind of got that nailed. We're pretty good at giving money to people who are coming out of top accelerator programs. That doesn't take a whole lot of courage. We're also pretty good at giving money to early people at famous name brand companies. And we're okay at giving money to people who have traction, but maybe where there isn't a relationship. We're okay at that, maybe like a C. And I was like, but what about all the people I meet who don't have a relationship with VCs, but also are pre-product market fit? And my observation was almost nobody wanted to give those people the opportunity to demonstrate that they could be successful as entrepreneurs. And when I looked at a lot of my best investments when I was at Uncork, they were largely first-time founders or maybe first-time successful founders who were pre-product market fit and who just lacked the connectivity to get plugged into the ecosystem. I would say Dataset launched Darkly fit that model. When we backed that company, Laura Behrens-Wu at Shippo definitely fit that model. We backed her company, Bastion at Postmates. The majority of our best investments were these people who just, their biggest deficit was social capital and was connectivity to the ecosystem. And I was like, well, this is a bizarre way to allocate capital. It's predominantly on the strength of a social connection. So what if we just said none of that stuff matters? We're going to try to do our best to underwrite people based on their potential. And as a result, I'm like, well, if I'm really underwriting people based on their potential for leadership, it doesn't actually matter to me that much what they're building because I'm trying to find the expert, not be the expert. So we're very broad. We've done everything from infant formula companies to we have a driverless boat, runs an electric drivetrain, to regular B2B SaaS and consumer social apps. And so we do a little bit of everything. I think for me, it's really because I'm primarily trying to find people who I think who are being underutilized in their current role. If I put them in a position of leadership and freedom, that they would thrive and not shrink.
So how, actually, I'm going to follow up with a question that's in the room right now because it's a good time to ask it. how blind are you to categories? Like, will you invest in a category that is hot? Will you invest in a category that has not worked? Are you really just like open?
I'm really open. I tell our team all the time, with a few exceptions, there are no bad categories. There are really only categories that haven't worked yet. We have certainly, I can point to examples in our portfolio where we've invested in the same concept or theme multiple times with different teams. I have one case where I've invested in the same theme with the same person 3 times. Yeah. It's a big space. This is construction.
Was the third time the charm?
I'm hoping so. We're in the middle of the third one right now, so I'm hoping the third one is the charm. And I try really hard not to write off categories because you never know when someone's going to approach you with a really thoughtful approach to something where no one's had the insight to unlock it before. So I try to be very, very open-minded about the possibility that even categories that haven't worked for us before could be unlocked by a smart person, and sometimes the circumstances change, a bunch of reasons.
Do you have any specific examples on like?
Sure. So we have a company. I can say about the construction one. I funded someone to build something that was kind of going to be a payment facilitation network for contractors. And what he figured out was that part of what makes being a contractor so difficult is really cash flow management issue. And that like you've got to pay your subcontractors, but you haven't been paid by your client, and it's very easy to get upside down. But if you have visibility about like when the accounts receivable are going to come in, you can actually provide financing to these contractors and allow them to pay their subs and take some of the financial pressure off of them for a pretty modest fee. And he built that, and it didn't work. And he goes, the problem is these people don't have project level ledgers. They use QuickBooks, but if they buy 100 nails, let's say they go to Home Depot and buy 100 nails. If 50 of those nails are for project A and 50 of those nails are for project B, they don't have a project-based accounting system that will allow them to allocate costs per job. So if we're going to make this payment facilitation thing work, we actually need a project-based ledger that sits on top of QuickBooks that will allow them to kind of allocate these costs and labor per job. And he pivoted into building that. And it turned out to be, sometimes the MVP is 99% of the current solution, and sometimes the MVP has to be 99.99% of the solution. And it turned out that like to make this product work, to sit on top of QuickBooks was actually a reasonably complete product. Mm-hmm. And it was more complete than I think we had financed the company to build because we thought that the MVP was a relatively thin layer. The third one takes the combination of those two learnings and is building something new.
So let's shift gears a little bit. Where and how do you source your deals?
We get the single biggest source of top of funnel for us is our website. That's like $1,000 a quarter-ish, $1,200 a quarter to the website. And we've found some fundable things through the website, and every quarter we find better and better stuff through the website. Our founder network is a big source. Our co-investor network is a big source. But I'm very open to just direct approach. Like I tell people, I don't want you wasting your time poking around on LinkedIn, trying to find somebody that we know in common. If there's somebody who really knows me, who knows you, great, but that's not a process. You can just come through the front door. And most people do, and I encourage them to do so. I look at the cold stuff. Our whole investment team looks at the stuff that comes in cold, and we take it seriously.
So if you have like this massive volume of opportunities that are coming your way, so what makes one stand out?
I think in most cases, it's usually, the one thing is when you look at a lot of companies, you start to develop a little bit of insight about a lot of different businesses. So normally the first thing I look at, what's the background of the people? Is this a problem they're attacking from a place of earned expertise? Or is this somebody who's sort of an outsider trying to like fix something that looks broken to them? the irony is that we have as many, if you look at our top companies, about half of them are people who had deep domain expertise in the problem they're solving, and the other half are people who were outsiders who came in with a fresh perspective. So I have kind of a liberal view on like founder market fit. Like the person just has to have an interesting angle or take on the current state of the market and why the time is right to build something that could be impactful. And I find that as often with people who know a lot as I do with people who know a little. And then I'm trying to always ask myself, like, is this a market where I think a startup has a good chance? There's some markets that I look at and I go, you know, gosh, it's just really hard as a startup to compete with Google and search, or to try to build an internet scale social network to compete with Facebook. It's not impossible, but you're competing with really well-financed companies kind of on their own terms. And that's hard. So I tend to look for markets where there aren't a lot of incumbents, there isn't a winner, maybe like we still don't actually know what the rules of the road are going to be for that market, and place our investments there. Like we started doing women's health in 2015, 2016, and a lot of people were like, is that a thing? I'm like, I don't know, it's more than half the population. I'm pretty sure it's going to be a thing, but it wasn't a really popular investment theme 10 years ago when we just started doing it because we met really awesome, talented founders who were building in that space. And so I think our job is to like follow talent.
So, okay, to that point, and you had written, actually you've written multiple times about investing in people over product. But what does that actually mean? So like you got, 1,000 cold inbounds and you're going to go look at everybody's LinkedIn page. What are you actually looking for?
This is the one thing where I feel like actually getting on the phone or getting on Zoom or meeting someone in person unlocks for me. The big thing, if I think about like, what do a lot of our most successful founders have in common? Many of them were individual contributors or lower level managers before they became founders. And I think when you're an individual contributor or kind of a junior manager, you don't have a lot of say in how your work is structured. The company like tells you how you're going to hire. The company sets the strategy. You're given a budget. And I meet these people so much more than they're being allowed to do in their current role. And if we take the constraints off this person of having to work in somebody else's system and give them the freedom to design their own thing, I think this person is going to rise to the occasion and flourish. And so oftentimes I will find examples in these people's backgrounds of them doing something that wasn't the easy, obvious, safe choice. That can be like, I can give you like, for example, we had one guy in our portfolio who moved to Japan to teach English without knowing any Japanese. And he's like, I'm going to learn Japanese while I teach English. And he ended up in a very rural village in Japan and trying to teach it. And like, that's someone who's comfortable getting outside of their comfort zone. I mean, for some people, it's athletic pursuits. For some people, it's hobbies. For some people, it's professional. But I'm always looking for some evidence that this is somebody who's restless, who's ready for more responsibility than they've been given in their current or most recent roles. And you see that in a resume sometimes, and sometimes it's the way the person talks about the problem and why they're so motivated to build a company to address whatever problem it is that they've decided to bite off.
Mm-hmm. Now, I imagine just out of like sheer time constraints, you are taking meetings and like doing phone calls with like a small fraction of the founders that come your way. Is there anything that folks can do to like improve their odds of actually getting on the call with you and like having the chance to talk to you about how they see the problem?
Yeah. Yes. My general view is like, as a firm, my goal is for us to take as many first meetings as we possibly can. One of the beauties of pre-seed is we practice it. And for us, that means rounds of $1 million or less for companies that are pre-product market fit and oftentimes pre-product period. There's just not that much due diligence on the back end other than the people. So my goal is to take as many first meetings as I can. So my bias is to meet with everybody who seems like they've got a reasonably interesting idea. So I would say like the things that help, write well is a big one. Like if you're going to reach out, like the email should make it really clear what it is that you do and kind of who the people are. I mean, if you, like I said, if you know somebody who knows me, like that's like a modest bump in the system, but it doesn't like shoot you all the way to the top. And sometimes things are out of your control. Like we've had a couple of categories lately where we've had some challenges. Like HR tech has been really hard in the current climate. So we're just doing less HR tech right now. It's not none, but it's a lot less than we used to do. And so sometimes I will just be in a moment where a certain theme or trend is like less attractive to me than others. So the bar for taking a meeting in those categories is higher. But honestly, if people write well and it's clear what they do, and I can connect the dots about how this can become an interesting company, odds are I will end up meeting with you.
Okay. So you just mentioned that you do most of your investments at the pre-seed stage. Is that still
Mhm.
true? You're also doing a lot of seeds these days.
I do, yeah. I mean, my passion is pre-seed, but we have this super strict definition of pre-seed, which is like this $1 million threshold. So we do a lot of seeds that look exactly like the pre-seeds in terms of where the companies are. They're just raising more money. Instead of getting started with $1 million, they're getting started with $3 million, and we consider that a seed round. And I frankly have different expectations for companies that start off life with $3 million than I do for companies that start off life with $1 million.
Yeah. So talk to me a little bit about what you like to see prior to participating in a true pre-seed and in a kind of seed.
Mm-hmm. I think for a true pre-seed, for me, the big thing is $1 million goes pretty quickly. You know, it's going to last you probably 18 months. For me, I have to be heavily aligned with the founder about what the most important problem to solve is with that money.
Mm-hmm.
I don't care as much that I have the answer for how to solve it, but for most of these companies, they've got to do two things. They've got to launch a product, and there's usually some big unknown. It could be customer acquisition cost. It could be distribution. It could be like customer willingness to pay. It could be, there's usually one big thing that's a strong hypothesis that we need to validate before we can go out and raise more money. And so I spend a lot of time trying to make sure that we are in agreement on what that thing is that we're going to work on together. For the seeds, I expect them to do all of that and start building out a management team. And so for the seeds, the big question for me is like, well, how far away are we from having a management team that could lead a company that's, you know, doing somewhere between 500 and 2 million in revenue a year? And I analyze those teams through that lens. So I apply more scrutiny to the seed ones because I take it for granted that they're going to build and ship a product and answer that question, but they're going to have to do more of the team building than I expect from I don't expect our pre-seed companies to do meaningful team build on the money that they're raising.
Mm-hmm. And so then what are some common reasons for passing?
You know, sometimes people present me with businesses and I try to be clear with people, like for us, the goal is to build a business that can generate 100 million in ARR in some not so distant point in the future. So call it 7 to 10 years from now. And we have companies that have gotten there in 5. We have companies that have gotten there in 7. We have some that have gotten there in 9 years. If you can get there, you have a venture scale business. You can have venture scale business below that. But if we can get to 100 million, then like I'm pretty convinced that we have something that other people are going to care about. Sometimes people show me companies and like, I do not see any way that we could possibly hit that threshold with the business that they presented to me based on what I know about that customer or what I know about their approach. That's a big one. There are other times I just disagree with, I agree with the existence of the problem, but I disagree with the approach that the founders taken to solve it. And sometimes I'll tell people there just must be an easier way to solve this problem than the version that you laid out. And like, I think the magic is in finding the easier way to solve this problem. I would say maybe like 10% of the time, I'm just unconvinced that the people are the right people for the task. I mean, I'm an optimist, so I generally assume that like people are going to surprise me to the upside if I back them. But about 10% of the time, just like these don't feel like the right. And usually it's, you know, this is a company where marketing is central, and neither of these people seem to have good marketing instincts, or they don't even agree with the proposition that marketing is going to be very important for this company.
That it resonates a lot because I feel like one of the most frustrating things that I see is like over engineering of the solution.
Oh yeah. Oh,
and I just
oh
want
my.
to,
Yes.
yeah, like
I
if you
see
have
that.
a
I see that a
soft,
lot.
like go at it, like just solve the actual problem. Don't go, don't build
Mhm.
like a other thing first, just so that you can then 5 years down the line
Yeah.
solve something that you actually want to solve.
I don't like the triple bank shot. Those are too tough. So.
Yeah, like it's hard enough to do one thing well.
Yep.
So to the point of how hard it is to do one thing well, so you've been investing for like a decade and a half, or
Mhm.
longer, hundreds of companies, you have breakouts. Um, what can you tell us about what have you learned about the founders that break through?
Um, it's interesting. Most of our most successful companies are still largely doing the thing that they told me they were going to do in the beginning.
Oh, that,
So,
okay. I want to hear more about that because I feel like
yeah,
that is like, everybody's like, oh, you're going to pivot 8 times.
the companies that are most successful in our portfolio are largely doing the thing that they told me they were going to do.
Fascinating.
And yeah, and look, part of it's, I think part of it's selection. Like I value the idea and the thing that people are doing.
Mhm.
And so it's not too surprising that the companies that we back are still doing the things that they said they would do. We have a couple that made pretty sharp pivots. And I think for me, that's because I do believe that the idea matters. And the less money you raise, the more important I think the idea is, because money is oxygen and time. And if you start off with an idea that's like flawed or can't work, and you don't have a lot of money, by the time you realize it isn't working, you will probably be out of cash and won't have the time or oxygen to pivot. So that's why I do care about the idea. More than we did this analysis for our annual meeting. More than, if you look at the top 10% of our portfolio companies, which are what we call our value drivers, more than half of them are female founded, female led. And what I've always told my LPs is like, I want the top of our portfolio to look like the funnel itself. Because if we have a bunch of founders, we have a bunch of people with varied backgrounds at the top of the funnel, but the most successful companies don't look like the funnel, I would have a lot of questions. And so, and it's interesting. A lot of our most successful companies are led by people who are doing this for the first time. Founders. I think the things they have in common is many of them picked really good problems to go after at a really good time. Like they were just early enough with the insight that there wasn't a ton of competition, and just early enough that there was a set of forward-thinking customers who were looking for solutions to those problems.
Mhm.
And I think it's so hard to get that window right.
Yeah.
Of like just the right amount of early, not too early, it's just so hard to get it right. And our best performing companies have done that, and all of them are in markets that are now significantly larger than I thought they were at the time that I invested. There's no pattern in where they went to school. There's no pattern in where they worked, with one exception. All of our, I think with one exception, all of our most successful founders had previous startup experience.
Mm.
And it turns out it actually doesn't really matter how successful that startup was.
That's
And
right.
my conclusion is that being in an early stage startup teaches you what it feels like to work in a very unstructured environment with limited resources. And that's really important in the 0 to 1 phase. And I've met a bunch of people from Google who they just don't have that muscle.
Yeah. I feel like of all the things that you mentioned, that feels like the only actionable one.
It is.
Yeah.
It's really, that's like, I tell people all the time, that's my biggest fear, is that people will start a company and they won't have either an intuitive or a learned sense of what startup speed feels like. And that is probably the number one predictor we find. Is my perception of your product velocity at 6 months is largely predictive of the outcome of the company.
Mm-hmm. Product velocity, like shipping velocity?
Mm-hmm. shipping velocity, and it's really velocity, like it has to be pointed in the right direction. But like, are you, and the way I think about it, and I'll stop after this. The way I think about it is most of the companies I meet, if you really boil down the pitch, regardless of the product, it's something like this. I'm a smart person with a good idea. I lack capital. If you give me money, it will unlock all of these things that I can't do today. Can't hire people, can't ship products. So I'm like, okay, well, 6 months is enough time for the money to make a difference. So after 6 months, the company should feel different than it did when it didn't have capital. And if it doesn't, that usually tells me that capital was a problem, but not the problem.
Yeah. Yeah. And I think that people don't realize that like going from being extremely bootstrapped to having some money is like a real shift in perspective. And like founders can get that really, really, really wrong. So what are some ways, like, is that something that you can learn before you do it for the first time? Or like, what are some tips there for that early deployment?
I tell people that like neither they nor I know how long it's going to take to find product market fit. I try to make this practical for people. I say if you're burning less than 25K and you've raised a month and you've raised money, I question whether you needed the money. Not that you could like bootstrap it and like that's you're not burning enough money to learn fast enough. And if you're burning more than $75,000 a month, I worry that you might run out of money before you get the insights you need. So I tell people if you're between 25 and 75K in burn in a major metro area like San Francisco or New York, $1 million last you 18 months, which ought to be enough time for you to find product market, some early signs of product market fit, and get the flywheel going. And if you can't do it in that time frame, maybe there's something fundamental about the team or about the market opportunity or about the market itself that we've learned that more money and more time wouldn't matter. And so that's the general advice I give our portfolio. Those are the sort of safety bounds. If you're below that, I'm going to have questions for you. If you're above that, I'm going to have questions for you as to whether or not like the spend is appropriate relative to the progress.
Let's switch gears a little bit. So April 2024. What are you excited about today? Like, are there sectors that you're excited about? Please don't just say AI, please go a little deeper. Are there themes that you're excited about? Are there founders that you're like, what's popping in your head right now?
We have a minimalist approach to AI. So we're doing some, but it's by no means the focus.
You haven't,
I really do like
turned into an AI fund?
No, I mean, I have some friends who went all YOLO AI with their funds, and it appears the early results are it appears to be working. That's just like not who we are as people at Precursor. So like we decided not to do that. I really like digital health. We continue to make a lot of investments in and around digital health. I've also always liked vertical software. That's been a good one for us. So one of the newer investments I've made, we should wire for it, knock on wood, today or tomorrow, is a case management software for law enforcement professionals. My stepfather is a retired policeman, and I've seen the tools that he used on the job. They are not modern. So most of the things, like I'm not that thematic. In most cases, I get excited by somebody who tells me about a product or a service that I was literally not thinking about before I got on Zoom with them or sat down with them to hear their pitch. And their enthusiasm for what they're building and their perspective on the problem is what kind of hooks me and pulls me in. And that ends up being how I do a lot of my investing. It really is like, wow, that person told me about a market I didn't even know about, and they framed the opportunity for me in a way that was so exciting that I don't know how to not be a part of what they're building.
Any sectors that you are just like sitting out right now? You talked about HR tech a little bit, but what are some things that you are kind of not super thrilled about?
We've always struggled with travel. I've always, on the consumer side, I've always struggled with travel. Just for me, it's been a very difficult category. I think digital fitness has been a really hard category for us. for a bunch of reasons. I'd also say any category where people stated desire to do something and they're like the evidence of their willingness to do it, where there's a big gap, I often struggle. And that ends up being oftentimes travel, fitness, diet and exercise. Like there's a handful of categories where I just think like you don't get the right signal by talking to your customers. You get the right signal by looking at what they actually do. But like I said, everything else feels like it's pretty fair game. For a while, we weren't doing much in legal tech, but I feel like I've seen more interesting innovations in and around the law lately. So that's been an area where I've spent more time. Yeah, those are probably the big ones.
I have a specific question. I should have asked this earlier from the chat. So you are not exclusively, but actively investing in a lot of underrepresented founders. Are there any trends in how you kind of experience their pitches that like you would call out? Any kind of advice or nuggets in there for folks?
I do find that people to the comments in there, I do think that on average, I find underrepresented folks ask for less money, which asking for too little money is kind of a weird signal to me. If someone's like, I just need 250K, I'm like, well, we don't have any precedent for anyone in our portfolio like building an amazing company with only 250K. And then sometimes I think they've gotten messaging from people to ask for less, or they've gotten feedback that like that's a better strategy, and I don't know that I agree with that advice. I also find that the projections are far more reasonable and grounded. And I think when you're reasonable and grounded in venture, sometimes you get punished because there are plenty of people who pitch me who are not reasonable and grounded. And I think a lot of VCs look at a presentation and say, whatever this person tells me that they call conservative, I'm going to do an additional discount. And I find a lot of underrepresented people they're doing the right thing. They're being honest, but I think sometimes they're penalized for honesty. So there's this fine line between how do you tell a story you believe in that it's optimistic and upside without lying. And I think that's sort of one theme I see. That's probably the big one. And I work with people if I see the projections and they feel low, I'm like, well, tell me what do these numbers really represent? Is this the best case scenario? Is this what you think? Like, how'd you come to this? And oftentimes as I talk to them, it's like, oh, these are actually kind of like the worst case scenario projections for this. And if I apply slightly different levers to things, it actually does look like an interesting thing.
I tell people that like it's total. So first of all, I 100% see the kind of difference in how big you present the opportunity. And I think that there's this like instinct to be conservative, to underpromise and overdeliver, to like show numbers that are possible rather than like, or that are likely rather than possible. And I think that like you can solve that with labeling. Like, like there's a difference between a projection and a vision. Like how big can this be? Not how big will this for sure be? And you just kind of have to know that like everybody else is showing how big it can be, not how big it will be. And like you can kind of show that truthfully by applying that lens, right? Like and actually while we're on this subject, because I have found I don't know if folks are on Twitter a lot, but like the past few days there's a VC who posted about like not fund models. You can tell where my brain is at.
Oh, Jay, you thinking about Jenny's
Yes,
tweet?
yes, I am. So like and who knew that it was such a frigging controversy? So where do you sit on the should founders have like a fund God damn it, not a fund model, like a business model in a
Financial.
sheet,
Yeah.
like at the pre-seed stage? Like let's talk about that.
I expect to see summary financials, not for, but like when I say summary, I mean this is what we think revenue will be. This is what we think expenses will be. And this is kind of what we think gross margins will look like at some future state. So the things that are useful for me are particularly if someone's like, oh, well, we have an SMB and an enterprise product. I'm like, okay, well, show me, my favorite chart is, well, show me the stacked bar chart of like, what are the relative contributions to revenue over time? And it's not an academic exercise, because if someone tells me we're really focused on SMB, but I'm like, but 75% of the revenue is going to come from enterprise based on your projections. So how are you going to maintain the company's focus on SMB if all the money you get? Or in other cases, they're like, oh, well, we have 3 ways to make money. And I'm like, well, one of these never gets to be bigger than 5% of revenue by your estimates. Why even do this? Why not simplify your life? And so I find that, like, it's not so much that I want to do a deep financial analysis. It's I want to see what are the assumptions that you baked into this, and how big do you think this business could get in the next 1 to 5 years? And do I agree? And sometimes people have these projections and like businesses don't grow that way, or at least the ones I've been involved in, like they don't grow that way. Like that doesn't look like a picture I've seen before. Or oh wow, if this is going to work, in order for you to get that number of customers, this company's going to have to be unbelievably good at marketing. And so I find that the financial model, like, and again, I'm not looking for anything sophisticated.
Yeah.
It just gives me a sense of like, okay, well, how many customers do we need? How are we going to acquire them? And it helps me focus my attention on, if this is the plan the person's laid out, what really matters?
Yeah.
And I find that without sort of summary financials, and I was surprised by like the feedback. I think some people heard financials and thought they meant like banker, you know.
Yeah.
I don't need cash flow statement, income statement, balance sheet. I'm not looking for that level of detail. I'm looking for like high level, this is how much money we think we can make, and here's how we're going to make it. Here's what we think it's going to cost for us to make it, because it helps me figure out, does this person have reasonable assumptions for the business on both the top line and I too, Leslie, was really shocked by like the level of like, I was like, there's a lot of projection happening in this thread. Like,
I feel like there's like a lot of trauma that people are working through in that.
yes.
I find
Exactly.
I'm like sitting here with my popcorn, like I'm like, people. So first of all, I have to say, like, Excel spreadsheets are like one of my love languages, and so I don't know what I'm like. It's so fun, like let's But I understand that that is a sort of just like a personal situation that I love to express myself in the database. But yeah, I mean, I've just like followed with. I like to see. I feel like I think that for me the rows and columns labeling is the most important part of the thing. It's just like, what do you think are the revenue sources and the KPIs that lead you to those revenue sources?
Yep.
That's it. Like, so that, because that's how I know that you're working on the right KPIs, right? Like,
Totally.
that's it. Like, I don't actually care so much about the numbers that are in there.
Yep.
But I do care that the levers. It's been fascinating.
Same thing. And I'm also just like, I don't know how to talk to somebody about the business they're building without having some sense of like how they think they're going to make money and all of that.
Yeah. And there's like something to be said for like demonstrating that you actually know what business you are building. And I think that that's what a lot of people, they don't actually know what business they are in.
I'll give you a perfect example. Sometimes I'll see a marketplace business and I'm like, wow, that take rate is like unbelievably low. The amount of volume you'll need is like shockingly high. Or I'm like, wow, that take rate's really aggressive. How are you gonna like spend that? And same thing, payments and transaction businesses. I'm like, why 2% and not 3%? Why 3% not what? And so I don't know. I just find it helps me understand what the person's gonna build.
Yeah, like really grounded in what they're doing. Yeah. Like get in their head a little bit as well. Okay. We have 10 minutes left, so I'm going to switch gears again. And this is like a kind of selfish question, because I found your recent post on who is participating at the pre-seed really interesting. And you wrote that your frequent co-investors in funds 1 and 2 are not your current frequent co-investors. So what's going on? What is this? What's going on?
I think what's happening is, for some people, I think pre-seed is a stepping stone in their fund evolution. And they start with a small fund and they go, well, I have a small fund. I have to write small checks. Where can I do that? Pre-seed is a good place to start. But if you ask them, what would you like to be doing? They'd like to be investing in post-product market fit companies with a little bit of revenue. It's just hard to do that with a $25 million fund unless you're going to tag along on a bunch of other people's interesting companies. I think part of this is that there are folks who just simply matured and were able to grow out of this stage, and it wasn't the thing they really wanted to do. There's others who've just changed their model and become really stage agnostic, and so pre-seed has just become a smaller chunk of what they invest in. And third, I think this is the majority of the people who've left, they've gone from risk on to risk off. And where they would have previously said, this is a smart person with a good idea who needs somebody to build a product. They're like, well, now I want to see the product. And now I want to see the product with a little bit of evidence and revenue, but I'm still doing pre-seed. I'm like, well, not the way you used to. And we've more or less stayed the same in terms of what we do in a world where a lot of our former co-investors have changed their model in response to the environment. And I don't say that as a criticism. I say it as like a observation / statement.
Yeah, totally. And so if you are a founder today raising pre-seed,
Yeah.
who's there? Do they want to say hi? Hi, friend.
Oh yeah, I was just saying.
If you are a founder today trying to raise a pre-seed, what advice do you have about the?
I think the good news is there's a bunch of brand new funds in pre-seed that have sort of popped up who I think are open-minded and run by good people. And so I think you might have to work a little harder to find some of the new names, but they're out there. And can you all hear me? Okay. Okay, cool. It looks like Leslie froze on my screen. It's a little harder to find these people, and I would say most pre-seed investors will expect you to do more in terms of output with $1 today than they would have 3 years ago, because they're getting feedback from the seed investors that the seed investors want / need to see more in order to get their company through the A. So I'd say the expectations of what your company will look like on the other side of having deployed that capital are higher than they used to be. So it's kind of harder to get the money, and it's also expected to do more with it once you get it. If that makes sense. So no pressure.
It looks like we might.
I just heard from Leslie. She seems to have lost Wi-Fi at her hotel. So she asked me to close the session.
Okay.
I'm just gonna look in. Sorry about that. I'm just looking into the chat to see that.
Oh, good.
That we can take. Charles, do you invest outside of the US?
We do. We'll do fintech globally. So we've got a number of fintech companies that we've invested in. Most of them are in Africa. We've done a little bit of fintech investing in Asia. It's not a huge focus, but we will continue to make investments in selectively, mostly Africa and Latin America, the two main places.
Okay. Yeah, so there was somebody who was asking actually specifically for Africa.
Yep.
And actually, this is interesting. We the connection actually that you and I have, and I meant to say this earlier, but we didn't get time to chat before, was actually with the investment. I think you guys are invested in Honeycomb.
Yes, Amelia. Mm-hmm.
Amelia, yeah, she's part of our portfolio, and actually a personal investment of mine. But how are you guys, thinking about from the fund's perspective? Are you personally also investing as an angel, or are you, or is the fund? At what stage are you looking at investments from the fund?
Yeah, so we'll go as early as the idea stage. I told my LPs it's probably too much of a conflict for me to do it. I mean, a bunch of them said, well, how do I know you're not going to put all the deals you're really excited about in your angel portfolio and the ones that you're not excited about in the fund? So I've forsworn angel investing. So I do everything through the fund or not at all. But we try to go as early as we possibly can.
So idea state is also open.
Yeah, I mean, it's hard for me to invest in people who haven't figured out what they want to build. We do a tiny bit of that, like a tiny bit of that.
Oh yeah, that's the here.
I'm so sorry. I'm at a hotel and like the Wi-Fi kicked me off completely. So sorry about that.
Yep. I'm in the lobby of my friend's office. I get it.
Well, we're kind of getting towards the end anyway. And so are there any additional questions from the chat that I missed here? Because I don't have any more. No?
There is one question about Charles's approach to hardware and robotics in space.
Yeah, and there was one on space hardware earlier that I saw as well. So what are you doing some of these like deep tech
hardware is about 10% of our portfolio. You know, the tricky thing is like the hardest things about those businesses is just the financing. Oftentimes, like what we've seen is it takes about $7 million to get a hardware product to market. That seems to be what it takes. And we can't finance that on our own. And oftentimes the companies can't do that in a single shot.
Mm-hmm. But you'll participate?
But we look, absolutely, yeah. It's about 10% of the portfolio. Have
you done any space tech?
I'm just starting to look more at space. Before I couldn't find space things that fit our pricing parameters. But I'm starting to see things that are in spec. Yeah.
Yeah, we just had a conversation as a team about that recently, and kind of I have been feeling the same. Like there's a lot of sectors that felt like science fiction a few years back that like now feel like pre-seed investments.
Yeah.
For better or worse. All right, Charles, it's always a joy to talk to you. Thank you so much.
Great.
How can founders get in touch with you?
Oh, I'm just Charles at precursorvc.com. They can just email me directly. I'm happy to hear from anybody on who's here.
Okay, amazing. And now the real final question. What can this community do for you today?
I don't know if you come across somebody who is looking for capital or advice and they're really early. I seriously spend a huge chunk of my day talking to people, not even with any expectation that it's going to necessarily be an investment.
All right. Well, I'm pretty sure you're going to be flooded with a lot of those after.
Yeah. All right.
Thank you so much for your time, Charles. Thank you, everybody.
Thank you for having us.
That was really, really fun. Sorry for the slight Wi-Fi situation. Divya, Jenna, thank you as always for your amazing work. And it's been lovely to spend an hour with you all. And we'll see you next month with David Hornick of Lobby Capital. Bye, everyone.
Thank you. Bye-bye.